Good day, trader. So, on Friday we woke up and we were all shocked with the decision, that the UK left the EU. And just a few hours later, we had David Cameron announce his resignation in October. And that not only that, but then they tallied the votes and they found out that the north of the UK, so over 80 to 90%, voted to stay in the EU. So it caused a lot of conflict between the north and the south of the UK, and so it obviously left the GBP, which is the Great British Pound, going down 9% in a day, and on Monday it went to its 30-year low. So there's huge conflict. Also, there is a new precedent now that, if one country can leave the EU, then the rest, and there'll be like a domino effect. So there can be like a Frexit, a France exit, a Grexit, that Greece exit, the Portugal, so where Portugal leaves, Italy, where Italy leaves, Tech out, where Czechoslovakia leaves, Austria, Finnish, which is Finland leaving, Slovak out, where Slovakia exits, Latvia, where Latvia ends, and Belgium, where Belgium can end. So the more countries that leave the EU, the more vulnerable and uncertain the EU will be. And this can cause massive stock market crashes around the world. In fact, now there is this petition going on which could signal the second EU referendum, and here's what it says. I've got a piece of paper here, I'll read it. It says, "We, the undersigned, call upon HM government to implement a rule that if the Remain or the vote is less than 60% based on the turnout, less than 75%, there should be another referendum." And last time I checked, there were over 3.6 million signatures. I'm sure it's a lot more by now. So if the second referendum goes underway, or the UK splits into two, then we can get maybe a stock market rally or confidence back in the world. But there's a lot of skepticism, if there is such a word, going on with the market. So obviously I let things calm down in the markets so that we can get prepared for the direction that the market's willing to go. So now we can go through our symbols and our watch list to see if anything's lining up. So Anglo wasn't affected that much. Bidvest, still the same. Brait broke its long-term or medium-term sideways trend, and now it looks like it's going up. Discovery broke below its wedge, and now it's back into the wedge, so nothing there. First Rand, it created that cup and handle. I was waiting for it to break out. It did not, okay? So I was not happy to go long just yet. Well, luckily we didn't, or else it would have hit our stop loss quite soon. Imperial also broke below that cup and handle, and so even if we got in, but I was very hesitant that week because of the EU, and then I saw 2 days later the market was going up, and I thought maybe it was a mistake, but luckily it wasn't, because it would have hit our stop losses. So we've avoided a lot of unnecessary losses, as you know. Old Mutual, this is the concerning thing, is that it made this beautiful W formation. I even wrote it down for the next possible trade, but I was waiting for the Brexit to come out. Brexit came out, and there was this huge gap. So even if we put the stop loss at 40 Rand, it would have opened at 37 Rand 24, which is a bigger loss than we would have expected. So luckily we did not take that. Raynet, we've got the same situation. Remgo, it still didn't break out of its W formation, so luckily we didn't take it. And even if we went short, where it broke back below, we would have been over here at making a loss. So going long or short is very difficult at the moment, not just for me, but majority of traders out there. Maybe intraday traders are having a better time, but day traders are not. So luckily we are out the markets completely, and you can feel that even being neutral is a position. Richemont's continuing its downside. RMBH, it broke out, and this is where I was looking to buy, and I had itchy fingers, but as I mentioned, I did not want to take a trade during that week, during the Brexit, and even this week where it's normally calming after the market's volatility. So clearly, even if we went short, we wouldn't be doing that great. Sasol, it's the only stock that looks like it's going to continue its downside for a short, and We've got some strong fundamentals coming out with Sasol. So I don't know. I've got an uncomfortable feeling right now with the market, and I trust my intuition because I have seen this over the last decade. TFG also created its gap, and now it's going back. So normally when a market gaps, there tends to be buying pressure to get it back up to see if there is demand at that level, and then it determines which direction it wants to go. Vodacom, absolutely nothing. Sideways. MTN still sideways. Billiton is showing a wedge formation which could break out to the upside. And, you know, I'm feeling quite good with resources. I'm thinking that resources will make a comeback before all the other stocks. So I think once it breaks out of the 190 Rand mark, that there could be a trade that's lining up. But we're not too sure. So we'll just wait it out until then. African Rainbow, still sideways, nothing confirmed. It showed that there was downside with the Brexit, then it closed up. So that wasn't really affected. Growth Point has made this nice inverse head and shoulders. The body did not touch this left shoulder, which is always a little bit hesitant. And the breakout was not completely strong, right? But I will watch this. I am writing it down as you speak. GRT, so I'm writing that down. That could be the next trade. We're not too sure. I'm just going to give the market a little bit more time to relax and come to equilibrium. Woolworths, nothing. Liberty Holdings broke out of its wedge formation, and now it's going sideways, more down than sideways. Merafi is, well, like I said, Merafi is not on my watch list for CFDs, but I love watching it to see the market movement and out of interest. Capitec hasn't broken out to the upside. Remember I wrote it last week where I said that we could be entering along once it breaks out. It didn't break out, so we didn't waste any money and we wouldn't have taken unnecessary losses, and even if we shorted, it wouldn't have done well. Bank of Africa sideways as well. SAB Miller is continuing its downside. It's 847 Rand from 990 Rand, where people were very confident that it was going to the 1,000 Rand mark, which I wasn't, because there was that deal with InBev that apparently is going to go through, definitely, but the markets are not reacting in a positive manner yet. And Bidcorp, well, we're still waiting for more candles and data. Then let's go back to our JSE Aussie, and it's following the same, the similar formations to all the other stocks where the Brexit happened. Look at this candle. You can tell that this is a black swan form of candle, right? In terms of the definition, is it 10 times the standard deviation of the normal move? Maybe 7, 8, I'm not sure. So I wouldn't consider it a complete black swan, but the event was completely unprecedented, and I'll consider this as one of the most erratic movements we've had this entire year. And now you know, once the market opened and came down, so it came down 3% the next day. Now look, it's back to where it previously was just a week or two ago. So the JSE is in bear mode, right? We are in bear mode. We're not in sideways movement anymore. We're in bear mode because it broke below the support, and now I'm looking for shorts. But I'm going to take the conservative approach, and I'm going to wait for more downside to confirm before we go in, because the market could very easily go back to its norm, and if it breaks out, then it could go into bull mode again. So what does this all mean for you? Neutral is a position. Let me save you from making unnecessary losses. This is a very interesting time of being out of the market, but watching the market movements. Because remember, traders that aren't really aware of the entirety of the market are getting in based on their emotions, how they feel. I don't get in out of how I feel. I base it on the levels that broke out and the movements that is happening previously, right? So not just yet we're seeing stocks line up. We didn't take that many trades last month purely because of this volatility, but luckily we saved you from taking loss after loss after loss, and I think we're looking good for, let's say, middle of July, maybe in the beginning of July, so maybe the 10th of July we should start seeing some direction movements. where we can take some trades. But until then, let me know what you think. I'd love to hear your comments or questions or even criticism. Everything helps me with this trader service, as is between me and you, and our journey on becoming more successful traders and following the markets as they are. And you know what? This is a very big learning curve that if someone says, so where are you in the markets? And you can tell them exactly what the JSE is doing and what the other stocks are doing, how the banks made a fake out. Well, it wasn't really a fake out because it didn't break out and then went back in. The banks were showing upside and then it broke back down. So luckily we didn't take any of those positions this week. And next week, well, that's a new kettle of fish. So hope you enjoyed this webinar, and let me know at theinvestorsclub.co.za.